Thursday was a wild ride that ended nowhere. ES dropped nearly 100 points from overnight highs to 65.10, then staged a mechanical bounce to close at 66.24, essentially flat on the day. The move lower was real. Iran headlines, crude oil pushing above $112, and the Fed's Goolsbee openly worrying about oil-driven inflation. The bounce was mechanical. Zero DTE put closing, dealer hedging unwind, and a $2.8 billion buy-side market on close imbalance. Real-time options flow peaked at 3.7 billion cumulative delta, then rolled over while price stayed flat. That's a negative divergence. It tells you the rally had no legs. Now we head into a 3-day weekend. NFP releases Friday 8:30 a.m. into a closed market. No hedging, no adjustments, just 60-plus hours of waiting before futures reopen Sunday night. That is about as binary as it gets. The geopolitical picture keeps getting worse. The Strait of Hormuz is effectively closed. Iran is preparing a pact with Oman to collect tolls from shippers. The USS Ford carrier is moving to rejoin operations. Drones hit Iraq's border crossing with Jordan. Crude at 112 reflects genuine supply disruption. Goolsbee says the oil price rise is quite serious, and gasoline prices can increase inflation expectations. Williams says policy is in the right place, but is watching private credit closely. Blue Owl Capital is limiting redemptions from 2 private credit funds. Another stress fracture. Institutional options flow was overwhelmingly bearish. Net negative delta hit negative 9.46 billion, the 87th percentile. SPY at negative 4 billion. SPX at negative 3.7. QQQ at negative 1.97. These are directional bets, not hedges. VIX 50 calls for October 26 were bought 80,000 contracts. That signals institutional conviction that volatility hasn't even come close to peaking yet. Microsoft saw 300 million plus inputs on a single expiry. Institutions are bracing for something significantly worse in Q2. The gamma environment remains deeply negative at negative 0.508. Stability closed at 16%, extremely low, signaling conditions for a big move remain loaded. ES closed just 3 points below the critical gamma flip level at 66.27, right on the knife's edge. Expected range, 6430 to 6700, wider than normal due to dual weekend catalysts. Most likely path. Sunday gap, lower on war escalation, plus NFP uncertainty. Monday morning volatility around ISM services, then consolidation. Path of least resistance remains lower. Monday. XOM earnings at 6:30 a.m., especially sensitive given oil at 112. ISM services at 10 a.m. Plus this week, durable goods. Tuesday FOMC minutes. Wednesday core PCE and GDP Thursday, CPI Friday. This is one of the densest data weeks of the year. Resistance. 6670 to 6680, the 4-hour structure resistance, needs to clear for any trend change. 6641 to 6650. The key gamma level, strong rejection zone. 6627 to 6635. The critical gamma inflection where dealer behavior flips. 6605 to 6610. The 20-day moving average bears reload shorts here. And 6590 to 6600, the dealer pivot. Below is bearish, above is bullish. Support, 6591 to 94, the volatility acceleration level. Below this, moves get fast. 6541 to 5550, major gamma support, the explicit downside target. 6509 to 25, Thursday's session low. 6439 to 6495, deep support, roughly 2% from here, and 6417 down to 6366, extreme downside on major shock only. NFP scenarios. If weak under 20,000, a short-term pop on rate cut hopes, but the rally should be sold. 112 oil means the Fed can't cut regardless. If strong, above 100,000, Gap down towards 65.91 or 65.41. Strong labor plus 112 oil is the worst case for bulls. If inline, muted reaction, but the weekend gap is still driven by Iran. Iran escalation over the weekend, strikes on oil infrastructure, further strait closures, retaliatory attacks. This is what institutions are positioned for. Gap down 50 to 100 plus points on Sunday open. Crude could spike to 120 plus. Iran de-escalation. Ceasefire talks or diplomatic channels open. Positioning is so one-sided that any peace signal triggers a massive short squeeze. 6,700 plus quickly. Lower probability, but can't be ignored. Primary setup. Short from 66.27 to 66.41. Stop at 66.70. Target 65.41. The key gamma support at SPX 6500. Risk 29 to 43 points. Reward 86 to 100 points. About a 2.5 to 1 ratio. Stability at 16% means the spring is coiled. NFP plus Iran developments over a 3-day weekend is about as loaded a catalyst setup as you'll see. The negative gamma environment means when the move comes, it will be amplified. Patience and positioning are everything right now. For more detailed analysis, check the link in the bio.